Hello everyone and welcome to Ticker.com news channel on YouTube. On this channel we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. Key economic events of the week included GDP, new home sales, and durable goods orders, and a key measure of inflation in the US. The Price Consumption Expenditure Index, a measure of inflation, increased 3.8% in May from a year ago and rose 0.1% from the previous month. Core PCE index, which excludes food and energy, increased 0.3% as expected and rose 4.6% from a year ago. The overall inflation and core inflation measures slowed from the previous month and from a year ago, extending the trend seen in the last 5 months. In the third estimates, the real USG economic growth was revised sharply higher to 2.0% from 1.3% in the previous estimate. In the fourth quarter of 2022, real GDP increased 2.6%, but in the first quarter of 2023, the economic growth estimate was revised higher because of higher consumption, higher consumer and public spending, and exports contributed to the upward revision. U.S. international goods trade deficit in May declined 6.1% to $91.1 billion from $97.1 billion. Durable goods orders rose more than expected and new home sales also advanced. Durable goods orders expanded in May 1.7%, faster than upwardly revised 1.2% in April. New home sales jumped 12.2% in May to 763,000 units on a seasonally adjusted basis. The annual rate jumped to a high not seen since February of last year and increased 20% from a year ago when the annual rate was estimated at 636,000 homes. Let us shift our focus to Europe and review key economic data released this week. Consumer price inflation in the Eurozone eased to 5.5% in June from 6.1% in May, and the consumer inflation rate dropped for the third month in a row and fell to the level last seen in January 2022, or 17 months ago. On a monthly basis, consumer price inflation and core inflations were 0.3% in June. Investors cheered the steady decline in inflation, but the level remained above the European Central Bank's target rate of 2%. Moreover, core inflation, which excludes volatile food and energy, increased to 5.4% from 5.3% and stayed near the recent peak of 5.7%. In the currency union, inflation in Germany accelerated to 6.8% from 6.3%, but slowed in Austria, the Netherlands, Portugal, Italy, and France. Inflation in Spain, Luxembourg, and Belgium dropped below the ECB's target level of 2%. The seasonally adjusted unemployment rate in the euro area held at 6.5% in May and matched the previous month's rate but fell from 6.7% in the month a year ago. The record low unemployment rate highlighted tight labor market conditions, and the number of unemployed declined by 57,000 from the previous month to 11 million, the lowest level since record-keeping began in 1995. Compared to a year ago, unemployment decreased by 257,000 in the European Union and 227,000 in the euro area. Jobless rate among the young workers, those below the age of 25, held at 13.9% or 2.226 million compared to the previous month. The Central Bank of Sweden lifted its policy rate by 25 basis points to 3.75%, seventh rate increase in a row. The central bank raised rates to the level last seen in 2008 and left its inflation outlook to 8.9% in the current year, but revised higher to 4.3% from the previous estimate of 4% in 2024. Swedish krona faced fresh sell-off after the central bank lifted rates at a slower pace. The krona dropped to 10.8 against the dollar and plunged to a record low 11.8 against the euro after the weaker than expected rate increase and risk aversion kept the currency under pressure. Sentiment for the currency weakened on the fears that the central bank has little flexibility in lifting rates on the worries of a deepening rout in the property sector after higher rates plunged property prices by 20% from the peak in March 2022. Spain's retail sales in May surged 6% from a year ago from the revised 5.7% in April, and sales in May increased for the sixth month in a row. Moving on to Asia, China's factory activities remained in contraction for the third month in a row according to the official data. The official composite PMI, which includes both manufacturing and service activity, fell to 52.3 in June from 52.9 in May. China's economic recovery has also been hit by rising youth unemployment as well as disappointing retail sales and industrial production. Youth unemployment in China rose to a new high of 20.8% in June, despite the overall jobless rate remained unchanged at 5.2% in May. Youth jobless rate is expected to rise in coming months as about 11 million college graduates start looking for jobs. Marriages or wedding registrations in China dropped to 6.8 million in 2022, the lowest level since 1979, after peaking above 11.5 million in 2013. Turning our attention to Japan, retail sales rose 5.7% in May and increased above 5% for the fifth month in a row. Japan's industrial production declined 1.6% in May and fell for the first time in 4 months, but despite the decline, most economists are anticipating production to rebound in the quarter. Tokyo consumer inflation rose 3.1% in June and accelerated for the second time in 3 months, raising expectations that the Bank of Japan will revise higher inflation forecast. India's current account deficit declined in the March quarter to $1.5 billion, a sharp fall from the previous quarter after service exports surged and imports fell on weaker prices of commodities. In the financial year ending in March 2023, the current account deficit increased to $67 billion, or 2% of GDP, from $38.7 billion or 1.2% of GDP in the previous year, reflecting a sharp jump in international trade deficit to $265.3 billion from $189.5 billion. Moving on to the stock markets around the world and how investors reacted to the latest flow of economic news. Stock markets rallied in the US, Europe, Japan, and India, and closed the first half on a high note on Friday. Despite the Federal Reserve, the European Central Bank, and the Bank of England strongly reiterating the need to raise rates, markets continue to power ahead. The S&P 500 index advanced over 5% in June and jumped over 7% in the second quarter and soared 16.5% in the first half. The Nasdaq Composite Index increased over 5% in June, advanced over 12% in the second quarter, and jumped nearly 33% in the first half. European markets closed higher on Friday and extended gains in the second quarter and in the first half. At the end of the first half, the DAX index advanced 14.8%, the CAC 40 index gained 12.2%, but the FTSE 100 index fell 0.3%. The yen dropped below 145 against the dollar for the first time since November on Friday, inching closer to a level where Japan intervened for the first time since 1998. We now review individual stocks in the news this week. Switzerland-based UBS said it plans to cut over half of Credit Suisse staff. Aston Martin and Lucid Group struck a production deal for electric vehicles. U.S. home builders continue to advance on robust demand for new homes. The UK-based Wise plc, money transfer service company, lifted its annual outlook. The apparel retailer H&M forecasted revenue and earnings growth in the year, and the U.S.-based Lordstown Motor filed for bankruptcy protection. Walgreens Boots dropped after sales and earnings fell, and the UK-based Mulberry Group reiterated its annual outlook. Meta Platforms, the parent of Facebook, extended this year's gain to 130% on optimism about video ads, and Nike reported a sharp decline in earnings but continued stock buybacks. Constellation Brands forecasted a decline in wine and spirit sales in fiscal 2024, and Dominion Energy lowered its second quarter operating earnings estimate. In the week ahead, the U.S. is set to release non-farm payrolls data for June. In Europe, France is scheduled to release its international trade data. Germany will report foreign trade, factory orders, and industrial production for May. In Asia, India and China are set to release manufacturing surveys, and Japan is set to report Tankan Large Manufacturers Index for the second quarter. Indonesia and Philippines are set to announce inflation indexes. We will see you next week.